Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in this video, we're going to be talking about why I decided to sell out my entire position in Ford. We'll take a look at my position in Ford, including when I purchased the stock, when I sold the stock, how much I gained or lost on the stock, and we'll also take a look at the company's financial metrics, which will help us understand why I decided to sell out of the company. Now, if you are into that kind of thing, you should subscribe to the channel. I post weekly investing content. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Now, before we begin, there's two quick things I want to talk about. First, if you haven't yet downloaded this future value calculator, which helps simulate your portfolio value in the next 10, 20, 30, or even 40 years, make sure to check out my Patreon. It's currently free and you can download it for yourself and use it in the spreadsheet. I do have some big changes in store for the Patreon this year, so I would definitely get this future value calculator while it's still up there. The second thing I want to quickly talk about is the earnings calendar for this upcoming week. There are a lot of big names, earnings are picking up once again, and we have a lot to look at. Now, the reason I'm bringing this up is I want to ask you guys, and please let me know in the comments down below whether or not you want me to cover any of these companies after earnings. A simple yes or no will do, but it helps me have an idea of whether or not you guys want to see this type of content. I could post a middle of the week upload in that case, for example, something on Wednesday after market close, or recently after Thursday's market close, and I can do a little bit of an update on the stocks that I do own and what I think about their earnings. So if that is something that you are interested in, let me know so that I can add it to my calendar. Taking a quick look at this earnings calendar and just highlighting some of the more interesting ones, we have SoFi on Monday, which is a pretty big one. We'll see how they do. They've been flying pretty high recently. Then we have ASML before market open on Wednesday, and we can follow that with Tesla, Meta, and Microsoft. So Wednesday is a huge day in the market. On Thursday, we have MasterCard and Visa, which are dividend staples, and we also have Apple, which is a dominant company in the market. And wrapping up the week with Friday, this might not be as interesting to you guys, and it is hard to see, but we have Booz Allen Hamilton here, and I really want to see how they do because I recently bought into the company. Now, one more thing, if you guys have any specific companies you want me to cover from here, you'd have to let me know down below, otherwise I'm just going to cover some general companies. So going back to my portfolio dashboard, I always like to do a quick recap before we get into the videos, so we can see right here that I invested $36,155, and my current portfolio value is sitting at $50,751. My total return is at 40.37% or a $14,595 unrealized gain. So far, I have earned $1,479 worth of dividend income, and all that has been reinvested back into the holdings that paid it out. Going forward, I am expected to be getting paid out $805 per year, and my portfolio yield is at 1.59% or a yield on cost of 2.23%. Now, my total holdings currently sit at 24 different holdings, but minus Ford, which I'm going to talk about today, is actually going to be 23 different holdings. Going into the My Pie section of my spreadsheet first, I use this section in order to stay organized, and it helps me allocate my portfolio the way I want to in terms of my risk tolerance. The largest portion is meant to be my key to success portion at 50% target allocation, but currently my divine dividend is actually larger. It's sitting at 47.8% compared to 43.3% of the key to success. The divine dividend section is just blue chip companies that pay consistent growing dividends, whereas the miscellaneous section is any companies that don't fit into any of the other two categories. For me, that would be Ford. It does not pay a growing dividend, which is why it ended up right here, and it's also not consistent in terms of how much it's paying out in its dividend income. The company itself has been highlighted red for quite some time, which meant it was on the chopping block, and of course, eventually it did get chopped off my portfolio. Now, as you can see right here, 3M and Intel are still highlighted in red, so sooner or later they'll probably be gone as well. So taking a look at my order history, this is one of the older individual holdings within my portfolio. So on the 10th of October 2022, I bought 3 shares at $11.35 per share, or a total order of $35.05. Now I use this order history section in order to populate the rest of my spreadsheet and helps me stay organized. Then 2 months later, on the 22nd of December in 2022, I bought 4 more shares of Ford at $11.25 per share, or $45 in total order. Now, at the time, the reason I purchased Ford was because I believed the stock price was trading pretty low and that the stock itself was just undervalued compared to the rest of the market. I had a lot of hope that their EV segment would do very well, especially since the F-150 is one of the best-selling cars in the United States. I figured that if they made an electric version of the F-150, it would perform just as well, if not even better. Now, of course, in the long run, we can see that my thesis was unfortunately false. Ford actually did not do that well with its EVs, and it's been scaling back the amount of EV production it's having because of how much money they've lost on it so far. Now, in total, I only bought 7 shares, equating to $70 invested, so it really wasn't any big position of mine. And if anything, I would have wished to invest more into Ford, even if it didn't perform so well, because I don't like having such small positions in my portfolio. As you guys may have noticed in my more recent trades, I tend to do much larger lump sum investments into new companies now, even if they won't perform that well in the future, because I want it to be a significant portion of my portfolio in case it does do well. So going into my sell history section, this is where I'm currently keeping track of my sells, and this is still a work in progress. I'm not sure exactly how I want to keep track of my sells. I added a couple more columns since the last time you guys saw this, but I think I'm starting to get to the point where I'm happy with it. So in December 27, 2024, a little over 2 years later, I sold my entire position in Ford. Now what I have right here, it shows that I purchased 7 shares of Ford, but with dividends reinvested, I actually owned 8.309 shares, so I sold all of the 8.309 shares. My original price paid was $11.29 per share, my cost basis for the total order was $79.05, and my price sold was $10.17 per share. So on a per share metric, I actually sold at a loss. Now the total order was higher at $84.50. That's because I end up selling more shares because of its dividends being reinvested. Now in total, even though I sold the shares themselves at a loss, I was actually up 6.9% on this position, not including of course the tax implications from the dividends because of that dividend income that I was receiving. Now overall, I would consider this a fail. The market outperformed Ford by a significant margin, so 6.9% is not very good at all. Now, it's no big deal at all. If you're investing in individual positions, some of them are just going to perform worse than others. You can't have all of them beating the market, otherwise everybody would do it. Now, taking a look at my dividend calendar, here's all dividends I received from Ford in 2024. So in March, they pay a bigger dividend usually. It was $2.57 because there's 2 different dividends. One of them is a special dividend because they like to pay out a certain percentage of their free cash flow in the form of a dividend. Then the rest of the year, the dividend was consistent. I had $120 in June, and then because I reinvested it, it became $121 in September, and then reinvested it, it became $123 in December. Now in March, they're probably going to be paying a bigger dividend again because of their special dividend, but I'm not going to be sticking around to find out. Now taking a look at the company's financial metrics, we can see some of the problems that I have with Ford stock. So the first thing is it's been having some poor performance. It was crashing a lot, and then come COVID, it definitely crashed down very far, all the way down to about $4 per share. Now anybody who bought right here would have been rewarded very nicely even with the current stock price today, but I unfortunately did not buy right there. Now the stock price did shoot up, I believe on a lot of EV hype as it approached $25 per share, and then it came crashing down, has not really shot back up since then. Now these graphs do a very good job at visualizing some of the problems with Ford stock, and you can see right here the revenue per share has just not really grown significantly over time. In 2019 it actually crashed pretty significantly, of course because of COVID, but since then it's not even sitting that much higher than it did before. Now a big reason for that is because the shares outstanding have remained mostly the same. If the company's not buying back shares, they're not really increasing their per share metrics significantly. Now for the earnings per share, it has been all over the place. There are some negative years like 2020 and 2022. 2021 was very highly positive, which is probably why it peaked so aggressively. But since then, 2023 is just even lower than it was sitting back in 2013. So just not something that I like to see. I want more consistent stocks. Now the same thing can be seen for the free cash flow per share. Again, it's just not very consistent. It grew very nicely up until 2016, only to be declining pretty sharply. 2019 was actually higher than 2018 surprisingly. 2020 was pretty nice, but since then it has been on the decline once again. Just the biggest thing I want to emphasize here is that Ford is just not a consistent company. Potentially it could have some good stock price returns in the future, but I don't want to wait around and find out. Now in terms of regular free cash flow versus stock-based compensation, it's actually pretty solid. The free cash flow growth itself is terrible, of course, but the stock-based compensation makes up a very small percentage of the free cash flow, which is something that I like to see. Now the dividend per share is all over the place, which makes sense. It's mostly aided by the special dividends that they pay out around March. So on years that they don't pay out a big special dividend like 2020 and 2021, the dividend per share is very low. Now, if you guys do remember from earlier, my Divine Dividend section focuses on blue chip companies with growing continuous dividends. Now, Ford clearly does not fit into that category, nor do I find it to be a turnaround play, so that is another reason why I decided to sell the company. Now, the last thing that I have here is their net income margin. Being an automotive maker, it is very capital intensive, and as you can see right here, their net income margin tends to be very, very low. Now, because of that, it is very hard for Ford to remain profitable, especially in down years. So I prefer to own companies with much higher net income margins, at least at 10%. And I want them to be more consistent as well. Now, as always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a quick look into my reasoning for selling my position in Ford. Now, if you did make it this far into the video, let me know down below whether or not you own Ford stock yourself or if you're planning on buying it. And if not, let me know whether or not you agree with my decision to sell my position in it. If you guys haven't yet checked out my video from last week where I talk about my new milestone that I hit and how I was able to hit this milestone in my investing journey, check it out right here. And if you want to check out my video talking about my investing plan for 2025, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.